All right, good afternoon, everybody. This is the Town of Dewey Beach Finance Committee meeting. It's February 14th at 3:04 p.m. and we are calling the meeting to order. Always want to do that. All right, let's start everyone with the Pledge of Allegiance. Pledge
Allegiance to the flag, United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Now let's go ahead with the roll call. I'm just going to go from my email list. I cannot read Bernie Kraus.
Bernie, no.
I don't see Bernie.
He's muted.
on screen.
Oh, he's not. Oh, he's quiet. Okay.
There you go.
Okay.
Yeah, I'm here though.
Somebody has to help me because I can't. Oh, there you are. Okay, John Gephardt is there. Mike Schaefer.
No, Mike Schaefer.
Okay, Mark Mayer.
No.
Vince Stuzio, I see.
Here.
Dominic Prestipino, I see Dominic. Eric Nelson.
I'm here.
Yep. Okay, Manuel Bramau, is that correctly? He accepted the meeting, and then Zeke I know is on a cruise. Suzanne, I don't see her on there. That's it, but we have a quorum. So
We do.
that is good. All right. Let's see. So if you all had a chance to review the agenda, can I have a motion to adopt the agenda for today?
Motion to adopt.
Second? Can I second it?
You need a second.
I need a second.
Second.
Thanks. All in favor?
Aye.
Aye.
All right, so the agenda is adopted. We also have the meeting minutes from December. Did everyone have a chance to review those? And could I have a motion to approve?
Motion.
Okay, here.
All right, and a second, the motion.
Need a second to proceed.
I didn't attend.
I'll second it.
Oh, thank you very much. Okay, so all those in favor of approving the minutes from last December's meeting?
Aye.
All right, thank you. Okay, so the motion passes. All right, now on to public comments.
Yes, public comment.
Do we have any public comments for the group today? Is there anyone on the phone?
No on Zoom at this time.
All right.
Okay, all right, thank you. All right, so now we're on to the presentation from Brown Advisory. As I mentioned, we have new representation. Sean Futch is on the line. And Sean, we're ready for you to introduce your team and get the discussion going. And one quick thing, I blocked a couple of hours today because this is our chance to kind of really dig into whatever we want to learn about from Brown and also deeper budget discussions so we don't bog down the commissioners meeting. So don't be shy. And I know sometimes on Zoom it's, people let things go and don't, but if you have any questions, issues, let's just air it all out today because the commissioners, we need to make a recommendation to the commissioners on anything to do with Brown, but then any of the other topics today so that they're ready for the meeting next week. So, thanks. All right. Sorry, Sean, take it away.
Thank you, Iris. Good afternoon, everyone. Always great to be with you all. Just to start, Iris, how much time do we have?
2 hours.
Yeah, well, our total meeting is 2 hours. I mean, don't take 2 hours, but if we, need to talk to you for an hour, that's fine. We have enough time to do that. If you see us falling asleep, then you know you're talking too much and vice versa, so.
No, all good. We'll try to keep things brief, but wanted to introduce myself as well as my colleague, Eddie Bradley. who will be, taking over for you all in place of Dominic, who recently took another role, had somewhat of a career change. He'll be actually, heading the pro disc golf tour moving forward. So we're super excited for him, but wanted to ensure, continuity and ensure that you all are in good hands. So I'll go ahead and share my screen now and allow us to kick off. So wanted to run through just introducing ourselves and then touch on a snapshot of the portfolios and the functions of each of the respective accounts, touch the IPS, and then briefly touch on the portfolio and some macro overview to wrap. So just to start, Sean Futch here. Been working on the investment team here at Brown Advisory behind the scenes with Dominic for the past 2 years. So I'm pretty familiar with the portfolio and came over to the firm from the Federal Reserve up in Philadelphia. And now looking forward to working alongside my colleague, Eddie Bradley, who you see here. And I'll allow Eddie to introduce himself quickly.
Thank you, Sean, and good to see everyone here virtually. You'll see it on this slide here, the makeup of your team. So I serve the role as portfolio manager, sit on the investment side of things. I've been with Brown Advisory for a little over 10 years and been in investment roles throughout that whole time. So Sean and I focus on the investment side. Rob LeBlanc, who is not with us today, handles everything on the client service and the administrative side of things. So handling cash flows, dealing with accounts, keeping some of the trains running on time, so to speak, is Rob's role. But I think the important thing that we wanted to emphasize today is there's been this turnover for your team is that all of our clients really are clients of the firm first, of Brown Advisory and the entire investment engine and our business overall. We're up near $170 billion in assets under management. We have clients in all 50 states, significant resources behind just the three of us that you see here, certainly resources that we lean on to manage our client relationships. And so I just wanted to emphasize that despite some of that turnover that you may have experienced, hopefully it's the same flavor when it comes to best investment ideas and getting all of the resources that we have, both here in the US and globally as well. We're almost 1,000 colleagues strong globally, and we've seen significant growth in that number as we've worked with many great clients like you all over the years. So excited to be here with you all today. And so as we flip to this roadmap for the portfolio, lays out really our understanding of where the portfolios have been, how they've been allocated, and each of their purposes. So we have the general fund and then the beach replenishment fund. And one item that we wanted to hash out today was the IPS that we recently was sent over was slightly different than how the portfolio was allocated from a previous IPS. And so we wanted to nail that down, ensure we have the right targets in terms of risk profile when it comes to the various portfolios. And as we look at it here, we've been allocating in a conservative tilt with the two shorter term portfolios having no equities, so really much less risk in the portfolio. So a combination of cash and fixed income. That'd be for the general fund and then the short term beach replenishment fund. And then on the long term fund, a little bit of equities there in that 30% allocation. And so that was one thing that as we looked at the IPS that had come over, there was a little bit more equity exposure in terms of the target allocation in those funds for the short term. And that was one thing we wanted to just confirm with the group to ensure we should move in that direction on a go forward basis. But we can certainly speak to the performance and the asset allocation and how we've been managing the portfolios as we go forward here. Any comments on that IPS question in terms of, I know we can maybe look at how it's currently been understood on our standpoint. And then I don't know if that's a takeaway that we wanted to dive into, Iris, on your end.
Yeah, well, I just got the update a little bit later this afternoon, so I think we need to probably go over that again. So I apologize, and I did not get a chance to send that out.
I think that I can happily summarize that. Effectively, what we've been doing in those two short term is, like I mentioned, no equity exposure. The IPS would indicate a target allocation there of 20% in equities. So instead of the 40% cash that we can highlight, instead of 40% cash and 60% fixed income, we would just take half of the cash and move it into equities. And really what that's looking to do, as the IPS is written, is just provide a little bit of growth relative to, you know, keeping up with inflation are some of the targets that are laid out there. Adding 20% in equities does increase a little bit of the volatility there, but still provides a significant amount of stability when it comes to liquidity in the portfolio, cash needs that have been coming out of here. There have not been significant withdrawals on these funds in recent years. And so if that's the expectation going forward, where there's still not going to be a significant or really much of a draw at all, I do think adding some equity exposure makes sense to provide a little bit of growth, both in the general fund and the short-term beach replenishment fund. The way we've allocated the long-term fund does align with the IPS, so there wouldn't be any changes there in terms of the 70% cash and fixed income, 30% in equities. So that is a little bit of a, as we think about that change, introducing some equities, the thought would be, well, is now a good time to do so? And despite the fact, and we'll touch on some of the run up in the market, with that run up, you would say, well, it may not be the best time, or we're near all-time highs. There's been some volatility as of late, which we'll get into. But as we think about the long-term nature of these accounts, even though they're earmarked as short-term, I still think that having some equity exposure and getting that into the portfolio would make sense today. Now is as good a time as any to get invested in equities when you have a 5 or longer year time horizon with those dollars. So that would be the recommendation that we would have, just to make sure that we're lined up with the IPS and there's nothing there to be unsure of when it comes to the investment objectives.
Next question.
Is there anyone from the committee have any questions, comments on that? Or Paul, Elizabeth?
I do. So how does, since we're dealing with public money, I understand us being conservative. How do we stack up against other municipalities with the level of conservatism that we have with our investments? Because the first thing that I look at here is long-term looks like it's more conservative than short-term, with the amount of cash versus fixed income.
So the biggest spread in terms of conservative, aggressive is really how much you have in risk assets versus non-risk assets. And so while the 70% cash and fixed income is, that is less than the 100% that we have in the short term. So we are properly aligned in terms of long-term dollars are more aggressive, which makes sense. It really, every municipality is different in terms of the nature of the funds, what the draw is, how those funds are expected to be used and the time horizon associated with that. I think ultimately here, there could be an opportunity, given that there has not been a significant draw on the portfolio. It all comes down to what is the expectation for need of the funds. If there is not a significant need, or if the spending policy is such that you're only able to take a certain amount, we'll see that in certain cases, then there's likely the ability to take a little bit more risk. But generally speaking, municipalities are a little more conservative than other types of clients. But that would be something that we would sort of just want to help you work through as it comes to what are the ultimate goals for the portfolio and how does that align.
But if you were to benchmark the performance of what we have with you guys compared to some of your other clients, is there anything that we could learn from that? Or obviously we'd like to have better performance always. So
certainly, I think from a performance is obviously a relative scale. And the biggest driver of performance is, again, how much is in risk versus how much is in stability. Your relative performance has been great in terms of the overall bottom line of the portfolio, still being, over the last 12 months, the portfolio on the long end has grown 8.5%. On the shorter term funds has grown just shy of 4%. So it is something that is in line with what we would expect given the allocation, but probably a little more conservative than we see with some other clients.
Do you think we're more conservative than other clients?
That would at a high level, yes. Doesn't mean it's the wrong place to be given where we are, but that would be the general point I would make.
That's fair. I mean, I look at it, you're managing accounts all over the country. How do we stack up? I mean, I don't think we need to be riskier than anybody else, but you obviously like more performance, so.
Hey, this is Bernie. It should be noted that we had voted to make it a lot more conservative because of the risk to some of the funds. They want to make sure that we kept that certain balance for the continuity fund. That's just FYI.
Well, a question I have is how do we determine how much is in the short term versus the long term? What is that definition?
So,
Do you have background on that?
yeah, I can pull up the doc on that.
Yeah, like, is it like, 1 year of potential operating, or, how do we? In here, all right.
So here we go. In this portfolio breakout section, this is the extent of the definition that we have, but have largely relied on the municipality and those contributions coming in. So we haven't necessarily dictated kind of where the capital flows end up in terms of the short and long term components of the portfolio.
Okay, so, it defines what it is, but I guess, there's an assumption of we need X to be short term. How do we establish what, that assumption? Like it says according to cash flow needs, so what's the cash flow need? That's my question, really.
While they're looking it up, I can provide some context from the old investment committee. A lot of times, each meeting, we would ask the town manager, hey, what do you need? Where do we got going? And kind of get a quarterly adjustment. But up to this point, there was never any need to draw any money. So It's kind of just let it grow.
Yeah, because I kind of wonder, is there, I know, like, with my, my personal accounts, we're sort of looking at sort of a sliding scale, right? And say, okay, anything that I need in the next year or whatever it is, or 18 months, and we get, that for sure is the very, very most conservative that is not going to be impacted, by volatility, and then some of the other stuff, could be there. So I just don't know if that whole, could we have a different scale of conservatism even within that short term, or is the short term the 1 year, or is it longer? That's what I don't know if I formed that question correctly, but.
I think ultimately to your point on that sliding scale of sort of known needs, generally speaking, when we have a known cash flow that's going to be coming out of the portfolio for whatever that is, restoration, beach replenishment, whatever that looks like, out of the general fund even, it's all usually that 0 to 18 months. We want to have certainly 0 to 6 months or 9 months, get that in cash, get that out of the market, really take off any of the risk there. We can move that into a money market fund, which is yielding 4% today. But as you get to go out further, that crystal ball is pretty foggy from a 0 to 18 month scale. So let's start to move those dollars out and replenish that. But it's all relative to that need. And so if we have, from a bucketing standpoint, the short-term funds here, what that 12 to 18 month look, is, maybe you extend that to 2 years just to be a little more conservative. And that would be something that would really be up to the committee and the group to decide what that right amount is. And then the balance, still not to say you would just take on equity risk there, but you could still have a balanced portfolio that has, from a volatility standpoint, a good cash and fixed income piece there, plus some equities really with the balance that's meant for long-term growth. And then as the IPS dictates a little bit, to hear from the town manager to say, what are those cash reserves looking like that are outside of this portfolio? What's needed there over the next X period of time? We can replenish either the short-term fund or those cash reserves that exist outside of the portfolio. So that would be probably a pretty typical arrangement we might see. But that would be something that I would be, would make sense to explore, I think, in a little bit more detail.
So we've never drawn from any of these accounts for any reason?
Not that I'm aware of, and unlike other municipalities that have a tax base that they can rely on for income during the year, we don't have that, so we do want to keep these investments conservative. We can't afford to lose
God
our
forbid we ever
investments if
need
we
it,
have
but-
nothing else coming in.
No, and I was not suggesting that, but again, there's different sort of levels of risk and there's different planning horizons. I was just trying to understand again, where do we draw the line that says what has to be in that most conservative and what do we not realistically need and we can afford to let it grow a bit
Sure.
faster or higher.
And could you remind me, please, of the difference between the beach replenishment long FE and beach replenishment long?
Sure. So those are effectively managed as one bucket. The FE dictates what's called flexible equity. So it's an individual equity strategy that we put into a separate account that's simply there to segregate that from the rest of the portfolio because the portfolio manager who's managing those individual stocks has their own cash balance. So it's a separately managed account, but we combine it with the other long portfolio into that one $6.4 million combined portfolio.
Thank you.
Do we have any more questions on this?
I have one.
All right.
If you were us, would you do anything different than we're doing now?
I think what's tricky with this is thinking about the risk profile associated with the cash flows, right? So to the question of, or to the point of nothing's come out of the portfolio over the last, since we've been involved almost 10 years, there has been significant upside in the equity markets. Not trying to play Monday morning quarterback by any stretch. There's been, some money left on the table from that perspective, but obviously looking back on a go-forward basis, there could be some opportunity to increase some equity exposure, given it doesn't seem to have that cash flow component coming out. But really, it's all about understanding what's the potential need, even in a situation where you'd have to dip into this in a big way. What is the scenario where that looks like? What are the factors that would lead to a large withdrawal needed, and just how big could that be? Is that 50% of the portfolio? Is that maybe only as much as 10% of the portfolio? And trying to quantify that figure over a multi-year period would be one of the biggest drivers for determining the appropriate risk profile. And then again, we sit back and to the earlier point about the tax base, right? Probably still dialing back that, you're dialing up the conservative nature of the investment strategy as well.
State your name, where you're from.
Gary Persinger, Dewey Beach, Commissioner. You have to think a little bit about the purpose for these funds and how they were created. I mean, obviously, we all know about the Beach Replenishment Fund. That's specified in statute. There are restrictions on how that can be used. There's a short-term component and a long-term component. Most of that money's in the long-term side. Then there's the general fund, short-term money. That was created over time, and Sheena will jump in here and correct me if I say anything wrong, but that was created over time from budget surpluses over the years. The issue that we most recently run into is that when we set up our general fund balance policy, which is something separate from here, which requires that we have a rainy day reserve of 6 months of operating expenses, and then 15% of operating expenses for our unassigned fund, which is where all the bills get paid from. The original intent, if you look at the implementation plan for our general fund policy, the implementation plan specified that we would take the then short-term general fund investment with Brown, which was at that time $1.3 million, and that would become the lion's share of our rainy day fund. At that time, the rainy day fund would have required, or did require, $1.9 million total as a reserve. And so 1.3 million of that was intended to be, again, the lion's share of the rainy day fund. That didn't happen for whatever reason. That rainy day fund was created, does exist in our general fund revenues, but it was created through other sources, other cash sources. So that now $1.4 million is sitting out there. And there's a determination now. There was some discussion at our last commissioners meeting about, this was honestly a surprise because we have not been tracking that on a monthly basis in terms of how that affects our fund balances. But if you look at our audit reports, that money is clearly accounted for. And you get some totals, particularly for the Town Hall Improvement Fund, which is much higher than the fund balance that we've been tracking on a monthly basis. So all that's to say is that we know there's some extra money there that we can use for the town hall, but there's still a question of what happens to the $1.4 million. And you have an issue on your agenda to talk about today. Does it stay at Brown Advisory, or is there a better way of accumulating money on that, accumulating some revenue from that? So again, just think about that. I just wanted to give you a little background on how those things came to be.
Thanks, Gary.
Thank you.
So it prompts me to ask another question. So the unassigned account, the 1.4, what kind of return have we gotten on that? 1.4
So if
million.
we skip ahead here and look, the general fund, since inception, we're looking at just shy of 1%, which of course is accounting for, where rates were or what the yields were on money markets kind of throughout that period. And then more recently, as we experienced one of the greatest rate hiking cycles over the past 40 years, we then saw money market yields somewhere north of 5%, which is what we discussed, Iris and I, via email over the past day or two. And so now, we have this breakout between cash that is sitting in the money market fund, earning that 4.3% currently over the past, 12 months, looking again north of 5%. And then that 50-ish% of fixed income in an intermediate bond vehicle that has returned, that provided a lesser return. But kind of to answer that question, the money market is earning 4.3%, and happy to kind of discuss what that looks like moving forward. But we don't necessarily see a need to change course as we see rates kind of sustaining for the foreseeable future at this point.
So if I understand your statement there, so we're making, going forward, it looks like 4.3%?
That's what the money market is
That's
yielding
good.
today. That's right.
But is that what our money is yielding today?
The short answer is yes.
Correct.
Of the 690,000, that's what the specific yield is today. And then the balance, which is in fixed income, has around a slightly higher yield than that. There does come with that a little bit more, credit exposure, credit risk. But the expectation is going forward, we should start to see in a higher for longer environment, to Sean's point, more return from the pure fixed income piece versus the pure money market cash piece. But the yield today is, yes, 4.3%.
Yeah, because that was a question I was having, because, the money markets are high now because of the current economic environment.
Correct.
If the money market rates go down, and I'm not an economist at all, but then, what would be the strategy to then try to increase, or would there be any way to get more interest on that part of the portfolio? Or is that always going to just be a slave to the money market? Could we put it in a bond fund or something else?
We can be creative at the margin where we can. It's obviously no free lunch when it comes to money market yields, and those are going to be floating. At different times, we've gone ahead and moved some money out of money markets into a specific treasury for a time period with the expectation of locking in those rates for a particular period of time, whether that was 6, 12, 18 months. And then beyond that, moving into a longer term bond fund that has a little bit more duration, that picks up a little bit more expectation for longer term returns is also a part of the strategy. So right now we're tilted. You can see the weightings there, 47%, 48% in cash versus the 52 in fixed income. Relative to the IPS, which is the question sort of that's out there, that's 40% in cash, 60% in fixed income. So we're leaning more in cash right now. I do think we'll start to recycle that closer to fixed income. But really the broader question for return, I think the gentleman's name, Gary there, who mentioned it, if there is a better use for these funds, if the reserve, the rainy day is housed somewhere else, and these can be used to generate a higher return, then increasing potentially an equity allocation would be the biggest driver of future returns, all in line with where this fits into the overall general fund purpose for the town.
Right. But kind of piggybacking on Eddie's point, as it stands, we're operating within some pretty strict guardrails so as to preserve capital within the account. And so kind of maintaining that high quality, that exposure, there's not much opportunity to play with anything like a high yield or anything because we're maintaining that AA credit rating.
Right. No, I was just really trying to understand sort of the different levers, not really, what we pull or not pull or anything like that, or not criticizing the strategy, just trying to.
Levers like high yield bonds, levers like dipping into some lower credit quality, but still looking at fundamental credit research are some things that can be done to using the word juice is hard in fixed income. It's hard to juice returns in a big way in an asset class where a great year is 5%, 6%. But there are some levers that are currently not available to us given the restrictions of the investment policy statement, which is normal and what we would expect for a municipality and for a portfolio like this.
Thank you.
Thanks, guys.
Any more comments or questions before we guys are stuck on chart 4, whatever. But this is great discussion, thank you.
Did you want to ask them to move forward through the presentation?
Yeah, I think we're ready, yeah.
All right, we can talk about asset allocation and sort of what we've done, or we can talk about the overall market environment. What would be helpful to look at next?
Well, I think for me, reviewing the different allocations, I think is pretty straightforward, makes sense to me. Does anybody else have any specific questions on those, or should we go ahead to the market outlook? Yeah, I think we can breeze through these pretty quickly, but we don't have any questions.
That sounds great. So Sean, if you want to flip ahead to page 18, and I think that as we look back on 2024, the recent market environment, the biggest thing that we've seen is a very concentrated market, particularly within equities. This has been driven by the Magnificent Seven stocks, which we can see on the right side of the page here. So the S&P 500 for the calendar year up 25%, back-to-back 25% years on the S&P. That's the first time we've seen that since the late 90s. But making up that 25% return really are effectively 10 stocks or 7 stocks if we just look at the Magnificent Seven. So NVIDIA, big AI push, their microchips that they've been selling, that made up by itself 20% of the S&P's return at 5.4%. And then we can look down the line and see the likes of Apple, Amazon, Meta or Facebook, Alphabet or Google, and then Broadcom, Microsoft, we have Tesla in there, JP Morgan and Berkshire. This is a very concentrated period in time. And what the left side of this page looks at is just how concentrated that is relative to history over the last 25 years. In any given year, we would expect somewhere near just shy of 50% of companies to be ahead of the S&P's return, right? In an index of 500 stocks, roughly half would beat the benchmark, roughly half would be below it to make up the overall return. And we can see what that's done in recent years. The last 2 years, those two bars on the right-hand side, 26 and 29%, those are the percentage of stocks that have beaten the benchmark. So very few stocks relative to all 500 are ahead of the overall return, which has made it a challenging environment for active managers to pick stocks to beat that benchmark. And so that's something that we've been up against when it comes to performance, and really the entire market has been up against that. Now, as we frame those 7 business models that have been driving a lot of the returns in the Magnificent Seven, it's not for lack of underlying fundamentals. It's not as if these companies are not some of the best well-run companies in the world. They certainly are. And as we compare that to previous time periods, I mentioned the late 90s in terms of the strength of these 2 back-to-back years. It's not as if we're in a bubble like we were in the tech bubble, where we had certain businesses that were just effectively valuations that couldn't have been understood under any mechanisms whatsoever. And so if we flip to the next page, we can look at what earnings have looked like for the Magnificent Seven. And over the last 12 months in 2024, their earnings grew almost 50%. Significant growth. A lot of that was led by NVIDIA, but not just NVIDIA by itself. And the other 493 grew closer to 3 to 4%. And so a big bifurcation in the market from a fundamental level. And we can see that blue bar on the far left side where overall earnings grew about 6%. As we think ahead and look at the outlook going forward, we do expect a broadening of return when it comes to what's going to drive the market going forward. And that can be seen by the underlying earnings expectations that the street and we also overlay are expecting from the Mag 7 plus the rest of the market. So that orange bar on the right side, 19% earnings growth expected for the Magnificent Seven. The rest of the market, closer to 12, still a great absolute number, about 14 for the broader market. And I do think that that's something that we should, we've started to see a little bit here to start the year, just 1 month. We're not going to glean too much from that. But it is something that we're focusing on in a big way and maintaining allocations across the page. And really, our style is to focus on underlying fundamentals, underlying business models, rather than applying a top-down theme or a top-down outlook on top of the portfolio. We want to really understand all the underlying business models within the portfolio. But we also are cognizant of valuations as we flip ahead to page 20, and we can look at where valuations are within the various equity market segments. And so these different columns have things like PE ratios and some other valuation ratios, that can be applied, some better or worse, to different asset classes. On US small cap companies, for example, we might look at something relative to sales or revenue versus earnings, given that they often aren't as profitable early in their life cycle. But what we can look at here is relative to each other. We have US large cap stocks continue to be at a premium valuation to the rest of the market. We're seeing some relative value within small cap, but also some great value within Japan, as well as the emerging markets. Now, valuation isn't the only metric that we look at. We have to layer on things like growth expectations in emerging markets and some non-US segments and US segments as well, the geopolitical risks in particular regions. So we're seeing some of that in Europe when it comes to their energy crisis there. We'll see what happens when it comes to the Ukraine war and how that plays out. Certainly a lot of headlines out of the Middle East. Middle East doesn't tend to be a significant player in the global equity market when it comes to specific underlying companies, but obviously that geopolitical risk has some ancillary effects that we're monitoring. So we're still staying constructive when it comes to the rest of the world in our allocations, but I do think that Japan is definitely an area of opportunity that we're looking at, quite hard within the equity bucket. And then one other one specifically, as we flip ahead one more page, within the individual asset classes, we can look at, well, how have they been valued relative to their own histories? And so the valuation table on the left-hand side here looks at US large cap growth or Asia ex Japan small cap segments, and it puts their valuation in a percentile ranking relative to the last 20 years. That far left-hand bar says 98%. That is the percentile for US large growth companies right now. Is that it's as high as it's ever been from a valuation standpoint. As I mentioned, there might be some fundamentals that make that deserving of that valuation, but it's a hard time to say, hey, now is the time to pound the table and buy, and lean in heavily to US large cap growth. But within small caps, which is highlighted in red, those two bars, they're at much less, they're underneath their median for the last 20 years. They're down at 14 and 38% on a basis. So seeing a lot more opportunity within small caps, and that's something that we're looking at quite closely. So broadening out from equities, we can also think about how does the election and that market, what's it driving in terms of winners and losers, and what's the expectation over the long run? And there's a lot of numbers on this page, and I won't try to go through them. But the general theme here, as you look at the material, more closely, is that the perceived winners from a particular outcome, whether that's a Republican victory or a Democratic victory, isn't often the case over longer periods of time. We can see in the short run, so typically right after an election, you'll see a particular asset class move a certain way, given the expectation of what that's going to do. Clean energy is a great example. We saw in Trump's first victory in 2016, clean energy pulled back right away in that first short period of time. It was down 6 or 15%, right? And then when Biden won in 2020, clean energy really shot up right away in that 8 to 12 week period after his victory. But as we expand it out, look over longer periods of time, that often isn't how it pans out. The market ultimately over longer periods doesn't care who's in the White House. The best environment for markets is actually when there's gridlock in Washington, where there's less change when it comes to policy, whether it's tax policy or regulatory policy, et cetera. So ultimately, the market hasn't proven to have a correlation to one party or another. There's really not those factors there. So our stance to that is we're not going to try to make these quick, big decisions in periods of volatility like we've seen. We prefer to play those environments where it might be a fundamental opportunity on a particular business model that's mispriced or misunderstood because of a policy that's changing, to get into that new business model, to buy that new stock, to turn over the portfolio in that way. But we're not going to sit back and try to make a big shift because of a particular tweet or a particular post or one particular headline. There's certainly a lot of moving parts that we need to take some time to digest and ultimately move forward on that.
How are you all handling, I know this is sort of, historical data, but, we're sort of at an unprecedented time right now where there's a lot of things happening all at once with uncertain consequences. What is that doing? How is that impacting your thinking in this moment? Or are you just hoping it'll settle out or waiting? I don't know. I know we're all kind of at sea, but.
I think we're all hoping it'll settle out in one way or another. Sean, if you flip to page 24, I think that what we try to do in these cases is really, tariffs is a good example, right? We have a lot of different rhetoric. We don't know what's going to happen on tariffs. We don't know when we see one thing come out over a weekend. I remember I was on a call with another client the Monday morning after the tariffs were announced over the weekend, and the market opened, and this call was at 9 a.m. By the time the call was over at 10 a.m., the tariffs had been paused for 30 days, and the market was already shifting. So we have these big moves very quickly. What we try to focus on is understanding the fundamental level. What are the specifics of, well, how do tariffs impact our economic growth? What's our current percentage of GDP that are imports related to different countries. We see that those dollars on the right-hand side, where our GDP is made up of about 14% from imports as a percentage. And Mexico's number one, Canada 2, China 3. We can kind of see those effects. And so we can kind of try to put in perspective, what might this mean? How might that impact growth in a particular region? How are we playing that? You can overlay those same ideas at the individual company level, which is a big undertaking to do. But we certainly do that when we have different policies come out. But ultimately, it's trying to put together the mosaic to, at the margin, shift here and there. And ultimately, we're not going to make significantly big decisions from an asset class standpoint. We're going to make a few tactical decisions a year, but ultimately we see that under the hood within strategies, turning over individual business models as the best way to play an ever-changing environment. That the seemingly whack-a-mole game that's happening in Washington of what the particular flavor or focus of the week is just something that's so hard to predict, and we're not going to claim that we have any sort of crystal ball to predict what might be next when it comes to that. And then I would say on the interest rate front, that's another area that we've been watching obviously very closely. Interest rates moved significantly in 24 in terms of expectations. We saw a number of cuts at the end of the year. The Fed's guidance right now is that they're not in a hurry to make a significant number of changes. I think there's a lot that's left to be gleaned from what Washington is focused on, how that's going to impact the overall economy, to my previous point. And so right now, the market seems to be pricing in more of a status quo from a policy rate standpoint. So we're trying to take that to it be in a higher for longer environment. That's likely to see more return from a little bit longer term bonds than simply what we've seen the last couple of years, where the short end of the yield curve has been the best place to be. So we'll start to see how that plays out. If there is a reverse of this inversion, more of a flattening of that curve, we're still sort of unsure of exactly how that will play out, but that is something that we are watching quite closely. I think ultimately, to wrap up the macro comments, there's a lot of slides in this portfolio, but Sean, if you flip all the way down to page 40 and put together this case for diversification, how we think about it overall, what this chart looks at is called the quilt chart. And you don't have to worry about the specific figures here, but what we've seen over the last 10 years is U.S. large cap has been far and away the best place to be, but not each and every year. There's different periods that different asset classes rise to the top of this page. And so what we're trying to do and what we're trying to play is diversification that leans in and out of some different asset classes at the margin and tries not to predict each year which one this is going to be, but what's going to persist over a longer period of time. And the longer period of time we can focus on, that's where we're more confident that equities will outperform fixed income, where fixed income will outperform cash. That hasn't necessarily been the case, where cash has outperformed fixed income over the last 18 months or so. But I think at some point that's going to flip, and it's going to be hard to predict exactly when that will happen. But with fixed income and the higher rates, with how much of their return is driven from interest income, that is something that I do think having a good healthy weighting to the fixed income markets over just cash will be a benefit to these portfolios going forward, particularly as we're probably at a not near peak rates. We're probably at peak rates, to a pretty strong degree. So hopefully I didn't see too many heads bobbing, but I'd welcome any questions from the group on any of these topics or other topics that are on members' minds.
Thanks. This has been really helpful to me. Does anybody else have any more questions for the Brown Group? Going once, going twice? All right, well, thank you all very much for joining us today, and unless I think that's all you have in your agenda for now, right?
That was our agenda. I think
great.
the lingering question is just the IPS clarification to make sure that we're allocated appropriately amongst the decision of the group of how to sort of bucket each of these portfolios.
Yes, we'll follow up on that for sure. So
Perfect.
thank you all very much.
Thank you very much for your time today.
Thank you. Take care all.
All right, so they're off now, right? I think before we move off this topic, one thing, we are talking about, and maybe this is, our action item, D is, but what is the, what is the flexibility that they have to move money around in versus if we go to the bank? So that's just, I guess we could do that, the agenda item D. Yeah, we'll do that. This. Our next item, let's go and talk about the budget real quick. Sheena, the workhorse, has gone through and made a bunch of updates. Sheena, do you want to just could you just quickly give an overview of the big rocks? I think we can kind of see what they are, but maybe level set everybody and then we can have any more discussion. But I think you tried to reflect what we did in the workshop, right?
Right, the everybody decided to increase the parking fees to $60, the fines. The parking tickets to $60, the hourly parking to $4 an hour. And then based on looking at what we're getting this year for transfer in the past couple years, that's been up to $700,000. And based on some decisions by the commissioners to remove a few of the allocations, we are now at, after the allocations, come on, $601 to the positive after allocations. Very happy about that.
When you say allocations, you mean set-asides?
The allocations as far as the 20% of building permits to streets and infrastructure, the 5% of transfer tax to rainy day, and 50% of hotel tax to to town hall. Those allocations being done out of the proceeds of the difference between the revenues and the expenses give us a positive of $601 predicted.
And one of the reasons that the fine for parking became so important, people were finding it was cheaper to not pay to park and maybe get a ticket, because the ticket was less than what the fine would, less than what they're going to pay to park.
Yeah, no, that
That
makes
seemed like a
sense
really
to me.
bad idea to play that game.
Don't take the risk.
Well, thank you very much for the hard work on this. I know that since we had the workshop, one thing that's kind of been bugging me is the lifeguard hourly. And, I know that we are able to recruit, we were gonna up it, but it just, for me, I'm like, gosh, we're paying the lifeguards the same as we're paying for the parking people. And I know the parking people we have to pay because nobody wants to do the job, but the lifeguards go through a hell of a lot more training and they have a lot of the EMT aspects that I really hadn't appreciated. And I know now the budget's balanced, I don't wanna screw it up, but I wonder, like, what if we were to, up that, and what is the net impact of increasing that like another $1, for example?
I can get you those numbers. It has a multi-line effect because for every $1 that we increase their salary, we have to take into consideration the taxes, of course, but it also increases our workers' comp.
Right.
So it does increase that. And these guys, I respect them. They're all very hardworking. I can get you those numbers. I can have them by Monday. I can have that figured out by
Well, I
Monday.
mean, I know that we're dumping a problem back in the commissioner's lap, so,
Right.
Paul, Elizabeth, I think you're about to go kill her right now.
But it's also, and I wouldn't mind doing it. I mean, I really wouldn't, you know.
Well, because I mean, if we're less than, I mean, do we want the, you know, I know, again, Todd does a great job recruiting, but do we want to sort of be, you know, don't we want the best of the best, and do we want to risk getting sort of the ones that couldn't get a job somewhere else come to us? I mean, we ought to be attracting the cream, I would think, but,
So if we change it to $20, then our police officers, our summer officers are still at 19.
okay, so
Okay,
it's,
and our parking attendants are at 19. We haven't had any problems recruiting. We are lower than all the other jurisdictions when it comes to lifeguarding, when it comes to pay. Rehoboth's gonna be $2 or $3 more than us this year. You
Okay.
know, we could take the money out and do that, but again, then we're paying our summer officers less, and they're going through a lot of
then
training.
you got somebody else,
And
yeah.
they put up with a lot of different challenges at night, with the active nightlife that we have here. So just consider that when you think about recommending maybe a change. for
Yeah, I
the-
didn't realize the police was also at
Yeah.
the 19, and that actually changes my opinion on it, and maybe it is what it is, but,
So,
And the captain said that this was,
gonna make him happy.
And another reason they're having issues is places to stay in Dewey. I know that's another reason their recruitment is down for lifeguards, where there's less and less places for them to stay for long-term summer rentals. So that might be playing into effect too, not just the annual fee, but you know, lack of housing for that, which is a completely different, you know, a completely different issue in and of itself. But I know that's attributing to their hardships with recruiting.
So other departments are giving bonuses to help with housing. They're giving bonuses if the lifeguards stay through Labor Day. We just don't have that in our budget.
Yeah.
so Sheena, in this budget, so we have lifeguards going from 17 to 19 now, right?
Yes, sir.
And then seasonals we did, was that the same?
The officers went from 18 to 19,
18 to 19, and then the parking ambassadors,
18 to 19.
18 to 19. So it looks like we're being consistent with lifeguards, seasonals, and parking making the same wage at this point.
Yes.
All right,
But we can always debate over which job's harder, but
We bring in a public safety impact fee, that could all be solved, right?
Yeah.
We don't have it.
but we haven't noticed any recruiting issues. Todd hasn't mentioned anything, or Tammy.
We have lost some lifeguards at the state park. They were paid $21 last year, but I think we lost 2 of those. We had at least 13 try out last year. Almost in every, he has 3 different tryouts, and I think we had at least 13 at each one.
Tryouts are next month, I think, right?
So they're the last 2 weekends in March, and I think the first weekend in April.
well, that could be something too, then if there's a problem, then we can maybe address that. In
So if there's
execution
money
as
at the
well.
end of the year in the budget, we would possibly come to the commissioners and say, hey, we'd like to give some lifeguards a bonus for staying through Labor Day, but right now, we don't have the money.
Right, okay. Yeah, maybe we can do it in the form of a bonus then. Right.
You mentioned, Sheena, you mentioned the $700,000. What does that refer to?
Transfer tax. People still buy and sell houses all the time. Thank God.
Is anybody, I have sort of a list of kind of notes of things that I thought down, but I don't want to, if anybody on the line wants to jump in on this topic, feel free, or else we can go, I can go down my list.
Yeah, I know this is always a controversial suggestion, but just having kind of listened to conversations related to our budget for the last several years regarding permits and fees and all the different ways, you know, we're trying to raise funds so that we can pay our lifeguards a competitive wage. We can pay our staff, town hall, and police a competitive wage. It really would. I know we're we haven't gotten there yet, but boy, and I know I'm saying this, and it would affect our bottom line as a homeowner. But gosh, we appear to be the only town beach town without a property tax. And a lot of these discussions could be made easier if we went that route.
True. Definitely makes it easier. That's a referendum. It's a referendum issue, though.
Well, I know those who are currently in elected office don't want to be the ones who necessarily maybe they feel vulnerable to a loss of elected office by proposing this. But we can just leave it to the folks in a referendum. I mean, I know it's not something that is on the tip of one's tongue as for the commissioners, but it's maybe perhaps the time to be more of a statesman than a politician.
Hey, John, it's Vinny. I'm not against the idea, but I'm just trying to think what would be our selling point to get that across to our residents to agree.
I think one of the selling points is that we wouldn't necessarily have to. I mean, in many ways, we're making it difficult for built construction permit fees. The fact that people want to come to the beach and have to worry about their parking and whether this is Dewey Beach is great, but there's no parking, and the parking that there is expensive, and they have expensive fines. I just think if the town thought about this from the cloud view, instead of there was a perfect in the Cape Gazette, there was a perfect a cartoon about Dewey Beach with trying to focus on all the different fees we have and how we can adjust them. And after a while, the people that are subject to those fees aren't going to be very interested in Dewey Beach, or I also whether it's construction, whether it's transfer, or whether it's parking, seasonal, whatever, whether it's those private homes that are renting, that are looking at potentially more on a rental tax. I just think that each year that I've kind of had a little bit of an experience with this, and it's limited, but we spend so much time and energy on tweaking these fees and permits as a way to improve our budget, when every other town along the beach has made the move to a tax.
Yeah.
I mean, we're working ourselves to the bone when a property tax would solve a lot of, it'd be a lot less work for Sheena and the town hall staff. And I think it could be sold by saying, look, hey, the reality is we've gone, what is it? It would be 44 years without a property tax. That's great. But we're the only town along the coast that doesn't have one. Instead of, we should think about a modest property tax.
Yeah. Thank you, John. I didn't mean to put you on the spot there, but I think if there's a counterbalance, and we could sell that to say, listen, we're nickel and diming you, our visitors. We want to stop that stuff. We don't want to continue raising the parking rate from $3.50 to $4 to $4.50 to $5. We want to kind of get it under control, and there'll be a balance. There'll be some more funds coming out of your pocket, but net, the town will be stronger. The visitorship and just the overall reputation of our town will increase, and that's beneficial to everybody. So,
right. And we can pay those folks that work so hard on behalf of the town a proper competitive wage, so we don't lose them.
Better police force, better lifeguards. Okay, we're putting a nice sales package together here.
Well, if you look at the macro level of the budget, I mean, half the budget is for the police, and then you add on the lifeguards, and maybe you're at 60 or whatever percent. And so, and I think the issue is making there's a couple challenges we have, but I think there's a case to be made again. Said it before, when I bought my house in 2009, there was nobody here at all in January, February. You could walk around all day and not see anyone. Every place was closed. Now we have town services that are very active every month of the year. They're less in the winter, but they're more. So there's just a reality, and that doesn't come for free, and it comes for people that have houses here, that live here, and a lot of them aren't renting their houses out, and so they aren't contributing from that perspective. And I don't want to pay more money either, but at the same time, I also want to feel safe, and I acknowledge those things. So I think that we could put together sort of a business case, but a historical case and how the town has changed. And there is a story there of why that has grown. And you could probably make a data-driven argument about it, looking at, how much the year rounds have increased. And we can probably ask the businesses if we really wanted to do that. But I think, we have to avoid a perception that we just want a slush fund to spend more money. And I think that, and unfortunately, the timing with the town hall, and then you see people say, oh my God, the town hall is expensive and it's gold plated, whatever. We're going to have to fight that too, or not. We're going to have to, we're not doing it because of that. So they kind of need to be decoupled, which will be a challenge. And so one thing I've been thinking about is we're doing some improvements now. Like we've gotten some software tools, right? More hardware. Can we start to collect data on how we're trying to be efficient, for example, that, like, what is that going to save us hour? Now we're going to the next fiscal year. How is these investments giving us a return? And then maybe, figuring out, is there a way to incentivize, working to budget or cost savings or whatever? Like we've got a really reasonable budget, and where we're under, can we, help reward people? Is there a way to give bonuses for doing better, or something that shows that we really are, as a committee, and really looking at being cost conscious and trying to save money and trying to incentivize people to do things and not have this perception of, this bloated government, which we're certainly not. We all know we're not, but there's obviously people out there that think that and think we're going to build this castle for, Bill and Sheena and Kate to live in, and so again, how do we collect and be prepared with data so that we can have these kind of discussions and be ready for the public?
We have public comment here from Jim.
My name is Jim Deegan, live in full-time resident on Hayden Road. I concur that the property should have a tax, but I think you better defend it. Right now, if you look at this meeting, you have one property owner here. If you start taxing people, this whole room's going to be filled, and they're going to challenge you on your police. Again, you say, hey, Dewey Beach has grown. I think the last census had us 504 people. And so we have 13 police officers for 504 people. So then I'm going to say, okay, where's my tax money going? Why do I need 13 officers? I walk down here January, February, March, April, May. The town's empty. It's empty, except for St. Patty's weekend. So as a taxpayer, I don't mind paying that, but I think you need to justify where that money's going. If you're going to talk infrastructure, sign me up. If you're going to talk my proportion of a police force to serve 504 people, sign me up. If that takes 2 officers. If you're going to give me, okay, it's going to take, again, as a property owner, I shouldn't have to pay for the 20,000 people that come and use our property. They don't give anything back. They just simply either urinate in the parking lot, throw beer cans, make noise. So I think that, I support the Finance Committee saying, hey, we need to get money from the property owners. I'm all for that, but make sure you have a plan that says where the money's going.
and I think that is exactly, what I was saying, but less eloquently is,
Thank you, Jim.
I
Kate?
think Eric on the committee wanted to weigh in on Zoom.
oh, excellent, sorry,
No, it's okay. I know, we're trying to,
I know, I can't, well, my problem is, LASIK, I guess, has failed, because I can't,
I told him, feel free, anybody on the committee, just unmute and say you
Yes.
want to interject.
Sing it out. Sorry, Eric.
No, you're fine. Thank you. Apologize for not appearing on camera. I think the agenda's topic is still the budget. Am I correct?
Yes.
I want to make sure that we have discussed as part of this agenda item the two questions that were emailed out earlier this week around health insurance coverage for non-police employees and family leave tax. I also had a question if we had, on the raising of the parking fees, the Rehoboth just had a whole Chamber of Commerce meeting on it where everybody didn't like it and they ended up not doing it. And I'm just wondering if we considered that in terms of any commentary or input from the Dewey Beach Chamber of Commerce, which I know is really part of Rehoboth, or, if we received any feedback on that, or if it's already been calculated into what we proposed in the budget in terms of the raise. 3 questions, I guess.
So, Eric, could you repeat each of those then? We're having a little hard time hearing
The
you.
audio is not great, yes, I'm not,
Yeah, I think it's his microphone, unfortunately.
Sorry, thank you. I'll speak up. 3 questions. Have we discussed the 2 questions that were emailed, health insurance coverage for non-police employees and paid family leave tax, those 2 questions, and then also, have we received any input from the Chamber of Commerce on raising the parking fees? Those are the 2 questions.
So in the Chamber of Commerce, we haven't. I think Carol, if she was here, she would say all the businesses are against raising parking fees, okay?
Yes.
Rehoboth went to $4 last year. Bethany Beach is going from $3 to $3.50 this year. As other folks on your committee have said, you really don't have a property tax here. We have to pay the bills here in Dewey Beach. And as a speaker just said a minute ago, those folks that come in and have that active nightlife and do the beer cans and urinating in public, they end up paying for parking unless they're renting. And if they're renting, we're getting a 3% rental tax, which is much lower than the surrounding towns. They're all 6, 7, and 8, but we're stuck at 3 by the charter. So that kind of answers the question about parking. As far as the Family Leave Act, I'll leave it to Sheena to discuss that.
We went with a broker for our coverage, so first of all, we do not have to start collecting or basically putting into the fund until next January. And with going through a broker, we will be going at a lower rate
To try to save.
than the state fund. So as of right now, it's not something that we will be discussing with the commissioners and our employees until September.
That's specific on the 50-50 employer-employee split.
No, it's something that's been thrown around, and as well as 0, as well as 100, everything's been thrown up in the air and nothing has been bounced off of anything
Percentage.
as far as percentages.
Understood. Thank you.
Yeah, and at this stage, open enrollment's already been done for this year, correct?
For
No,
health.
the Paid Family Medical Leave Act this is something that Delaware started. That if I were to have to take care of my parents, that something happened to my dad, that I could take up to 12 weeks off and the state would pay me up to $900 a week to stay at home and take care of my dad. The employers, not just it has to be a business that has more than 10 employees, and municipalities, even the smallest, have to participate. They It is to help the smaller employee businesses that do not have to participate in the Family Medical Leave Act. All government agencies have to participate in it anyway, so us being required to participate is a moot point.
Yeah, the question was specifically, has the town considered implementing a 50-50 employer-employee split on the tax, on the payroll tax?
We have not considered anything. We haven't discussed anything yet. Commissioner Bauer, the thing is with this, it's something that the state is required, and it's to help the smaller businesses. The towns have to participate. It's in September, we will be discussing with the commissioners what is going to be done. All businesses and towns have to participate. There will be something that will go mandatory, will be sent into the state, and all employees people that work a certain number of hours a year will be enrolled in it.
So what I'm hearing is that the town will look into whether or not they're going to do an employer-employee split on the paid family leave payroll tax later.
It will be discussed after budgets, and it will be a discussion like everything. Everything's a democracy.
I guess, should that be discussed as part of this budget going forward if this is something we're going to deal with in September?
The highest paid employee for this town, if they were to pay 50% of this at the highest rate, not through the broker, would have been $25 a month.
That's the tax. It's $25 a month for the payroll tax.
If that employee had to pay the 50%.
Got it.
So that's not.
It's
So
a net, right? So it doesn't move the needle at all from a budgetary standpoint.
Right.
Right, so
Great. I'm good. That's fine.
All right.
And then the health insurance coverage for non-police employees?
they have health insurance coverage.
We're all the same, that all the town employees that are full-time have the same as the police officers.
Yeah, the question that was asked of us was around reviewing the health insurance contributions for non-police employees.
I'm suggesting this year we don't change any of our health insurance. That'll be my suggestion to the commissioners, and we look at it for year 2027.
Put that on as yeah, because everybody's already enrolled for this year.
And to make any
Change it midstream.
to make any changes at this point, you would have, it would be too, there's not enough time to educate anyone.
Right, true.
Good answer. Again, I just want to make sure we have the discussion and we have a response. I mean, it's.
Sure. No, I understand you want to answer the email that was put out there. And the other thing is, we do have a very good health benefit program for our full-time employees. But our salaries are somewhat less than the surrounding towns. And I'll bring up the example I brought up before. Lewis, coming out of the academy, one of the new police officers, is at $75,000. One of our officers coming out of the academy is at $61,000. That's a pretty big difference. But the way we can ask those people to come here to be police officers is look at what we're providing to you for a health benefit. And that kind of levels the bubble a little bit. So we're going to have to make some decisions in the 2027 budget about healthcare and the benefits we're providing to not only our police officers, but also to our admin. But my suggestion is going to be for 2026, we stay where we are.
Well, I think what we need to do is catalog some of these big rocks that we are thinking about now. And that's what we really, between now and, when things are quieter and we're not trying to get this budget passed, but let's not forget until you know, a month before next year, but what are the things we want to look at, and how can we help, and, you know, are there other things that would, you know, make life easier?
And Iris, that goes back to your comments at the very beginning of our budget discussion about the $18, $19 an hour. Those folks don't necessarily get insurance because they're not full-time, but salaries across the board are lower in Dewey Beach. And we are attractive because of the lovely people they get to work with and because of the health insurance.
Right.
Being somebody who pays for my health insurance myself, because I don't have an employer, it's expensive.
It's bad.
Any other comments? No one in the
The
public?
only other question that was asked was around the staffing plan, but that's been posted, so I think we've dealt with that. Thank you.
Did you ask about the staffing plan?
That we're told that the staffing plan was just posted, and that was the other question about proceeding with the budget without the staffing plan that's required, but it's been posted, so I think we're good.
Okay, thank you, Eric.
I have a question too, I guess, and I'm not really sure how it works, but is there a way to look at, you know, when the gentleman that was just up talking about how Dewey has 13 cops for 500 residents, you know, it's the alcohol that's influenced by the bars. Like, do we look further into how the bars are and the restaurants are being taxed in the town to see if that can be adjusted a little bit? You know, maybe they should be paying more directly for the police force. It's just a suggestion, or not a suggestion, but more just a question of, you know, does that ever get looked at all?
You're reading my mind, Dominic. I was going to ask the same question.
That requires a referendum. That's a referendum issue, though, right? I mean, that has to go to a vote for the town, as I understand it.
And I think that the business question, we've discussed that, or some of the workshop, but, you know, a lot of the business owners also donate a lot of money, so, you know, are we, you know, you take money out of one pocket, put it in the other.
Yeah, because we talked about a little in December, and they're being taxed based on the number of tables they have. And a lot of these are standing bars. So, you know,
Right.
there's like some little things like that where it's just silly.
Well, and I think, I mean, honestly, if we're gonna try to do any kind of, in my opinion, any kind of proposition for a safety fee or anything else, I think we have to dig into all that and have all that data out there and make sure we understand it. And I think maybe that's what we can do as on the budgeting side in the off season, is maybe, you know, try to sort of lay some of that stuff out and you know, with the commissioners, but if that would be helpful, but, you know, dig into those things, because again, we're gonna have to justify it. We're gonna have to also make clear this is not a town hall funding exercise, it's let's run the town.
Right.
And if, you know, if the bars are getting, again, because I think it is, the bars now operate 12 months a year too, a lot of them, right? So,
Yep.
but we up their rates, and we've upped it different years in a row, so.
I'm on board with you, Dominic. Clearly, the bars are very successful, and that's great. They're bringing people into town. And the question between their revenue and their fees is something that we need to explore.
We can break all that down.
And we do have the fee structure is in some of those December emails, if you look back, of what it is, and, you know, we didn't really look at it, but I think there was one spreadsheet that Sheena had where she did some excursions of what it would be to change various things. And the way the fees are now, it doesn't move the needle a huge amount.
Right.
That was the other thing, as compared to the parking, just because of the volume of it, so.
Right.
Iris, do we have the detail of how much each establishment contributes
Yes.
Yes.
funding wise? We do. Can we take a look? Do we have access to that just to see?
Yeah, I'm pretty sure that we could go back and look for it, but in the slew of emails, probably around
business.
December,
Yeah.
there's a fee schedule, and there's also like number of seats per business and stuff like
Business
that.
license, we broke it down by small, medium, and large.
And then by the business name and how many seats they have, so, I don't know if it's all in one place, but we can construct that.
Yeah, I can't tell you that in my 35 years down here, how many times we've had this conversation about who pays what. And, you know, when we go through that, there is a lot of inequity. And I'll be, like, I live here and I don't rent my house out. When I bought my house 23 years ago, I paid a transfer tax. And aside from writing that $129 beach tax, I live here for free. That's, you know, you can't beat zero. I mean, that's the best deal in town. So, you know, but there's plenty, I'm not the only one. I mean, there's plenty of people that buy a house and don't rent it out. But business, you know, it depends how you define business. You can't say, I'm just gonna tax a bar. If I'm gonna tax a business, I gotta tax all businesses. I can't say, I'm gonna tax this one, but not that one. Some of the small, you know, when we say the bars make a ton of money, I think the larger ones make more money than the smaller ones, but the smaller ones, if we make that fee too high, we don't have them anymore. So where do those people go? You know, if we have less people here, because there's not as many, you can't get into places.
Into one shuttered bars.
Right, I mean, there's an argument that also says, you know, if we don't have the bars, we don't have the amount of parking revenue that we bring in too. We don't have as many police, right?
Police officers there.
Right.
Well, I think we could also, you know, just like taxes are done or whatever, it could be a graduated fee so that we could help out the smaller businesses and keep them in town. And at the same time, you know, the bigger businesses would be paying more of their fair share.
Right.
Well, and maybe the action too, if we have to do something is everybody bears some pain too. If the property owners do something, then we do something to the business owners a little bit at the same time that makes it palatable. I don't know, but I mean.
Right. Yeah, I think what we've concluded over the years is that charging a seat license and a business license fee was a way to do that. I know a number of years back, Jim, you probably remember this too, they wanted to tax just the bars, a sales tax on alcohol sales. But the state says, well, that's illegal to do. We don't have a sales tax here in the state. So Dewey Beach, you can't do whatever you just feel like
But
doing.
you know, but standing versus sitting, that's, you know, maybe that's a.
Some of them are based on fire marshal capacity.
Yeah. Right.
Depends on the
Yeah,
establishment.
and there's a lot of I mean, when you even look at that list, it's interesting, so.
Right.
This sounds like a wonderful thing for the committee to take on over the next year.
Yes, exactly, and not, you know.
Well-
Not the next 27
And-
minutes.
No,
to go back-
no, that's right.
And to go back with what John said, I mean, you know, I don't think from a commissioner standpoint, a referendum lets the people speak. You could say yes, you could say no. It doesn't matter. It doesn't change my life or Elizabeth's life or Mayor's life over here. I mean, if the people said, yes, I want to tax myself, or they say, no, I don't want to tax myself. That has no bearing on what my opinion is. I get one vote like the rest of you, so.
But again, for the people that are gonna wanna, you know, I think we have to do due diligence to say, we have reviewed every other revenue source, all the other paying we can do, we've looked at all the pencil sharpening we can do, and how to be, you know, very conservative on our expenditures and, you know, mindful in that regard, and make sure people have trust that this isn't, you know, that we are really very fiscally responsible. We're cheapskates in how we spend the town's money, we just can't, you know, make the numbers line up.
And the
She
most
put our
convincing,
revenue stream in there.
and the most,
Our income.
I'm sorry, the most convincing manner to show that we've all done our research, we've been working hard to look at the numbers, is if we have the commission's full support. If the commissioners say, look, you know, we've looked at this from every angle and with the finance committee, whatever, and we believe this is the right thing to do, I think the property owners would be more likely to vote yes if they realized that the commissioners were on board themselves.
Right. Some people are going to vote yes, some will vote no. That's how the democracy works. Now, put our income up there, Sheena. That looks like our expenses.
No, that's revenue.
Okay, but you know, how much was transfer tax? How much was parking? There you go.
Transfer tax, 600, or that's a 7.
All right.
700,000.
So that's geared, a transfer tax, that is a tax on a homeowner. Okay, what's the next one?
accommodations
A
tax.
one-time.
Yep, a one-time fee. Accommodation tax is the hotel, right?
No, that's.
That's the rental. So that's a visitor tax,
Mm-hmm,
okay? Hotel tax, it's a visitor tax.
yeah,
Cable TV franchise.
Yeah.
That's a property owner. I mean, that's such a small line item.
yeah.
And beach concessions. Is that visitor or residential? It's probably shared. So those are our revenue streams.
Yeah,
Now, if you go down here,
then you got your business licenses, your parking,
yep,
building, beach fires, that's
Right.
both of,
Right.
dog licenses, that's both.
so daily, hourly, and meters, I would say is a visitor tax. The hang
Yeah.
tags are resident tax.
That's both.
Some, I mean, it's.
But it's mostly.
Mostly,
Yeah.
yeah. So
Yeah,
you gotta go through, it's like, what's a business? If I rent my house, am I a business? Or am I not a business? Well, I'm a business. If I rent my house, I'm earning income on the town. There we go. So, this argument's been hashed back and forth, but yeah, if we could spell out like where our revenues come from visitors to residents.
Yeah, that's a good
And
idea.
then break down, okay, here's our books. Take a look. This is what we tax that's what we tax a resident. So, now you look at that, then you can dig down into the subset of B that says, okay, this is what businesses contribute to the town income, and this is what residents. That's the fairest answer, though, but no.
Using your example though, as a renter of our property in the summertime, the rental tax, yes, it does get passed on to the renter, but it's money that the owner, it's money that gets passed on to, the renter, but it's money that the owner could have enjoyed, or the owner has to take that into account in deciding how large a rental fee he should charge. So I wouldn't put that directly on the visitors.
Right.
If you are looking for how to define a business, by the way, I would say, take a look at the new state short-term rental tax. If you rent, you're a business, and you got to define yourself as a business, and you go through all the nonsense. If you had the joy of applying for a license, you know how that goes.
Well, you're looking at a business owner then, and I'm happy to say I am, who's all in favor of a property tax.
All right, well, that's a discussion for a referendum.
Well, and I think, and then it's gonna get down to what the magnitude is, right? I mean, it's different if it's $200 or $2,000 or, so. That's all stuff to look at, but.
Okay,
Dominic had to drop off, so you no longer have a quorum.
Which means we cannot vote?
so we can't vote now?
Correct.
So can we get Dominic back on so we can vote, and you got his number?
We really need to vote on B, please.
Or else we're not gonna, we can't have this meeting next Friday.
You can't vote on anything
Yes.
right now.
Because C and D could be moved, but B needs to happen.
All right, that's fine. Let me see if I have his. Are you looking for him?
March 7th is fine for me.
Trying to see if I have his cell number.
You look.
Pull them up
Oh,
on
here we go.
FaceTime.
Go.
I'm just gonna call him.
We've still got to discuss it, yes, you're right.
All right. Call him up and say, hey, go on, he's gone there in his car.
I tried to, I just tried to answer his cell.
Space on the microphone.
What's that?
Want me to talk on the mic as a town resident?
Well, I guess we have to adjourn at this point, unfortunately.
Oh, too bad.
But pardon, point of order, if the Finance Committee does not make recommendation to Town Council, can Town Council act on the budget?
No.
So the town budget is now
Oh, we
delayed.
could, yes, but
Anything in the town charter.
Just wanted to, this was point of order to help, yes. We're okay?
That's all, I think.
that's a Fred question, so we'll make sure.
He'll be here at 5 o'clock.
Maybe he'll come early. Do you see his car in the parking lot, chief? No.
Well, I mean, we could, well, but I mean, if we have time, we could still advertise a meeting. Could we have one we have one before the commissioners meeting to vote?
You don't have time to post it
Time to post it.
because you have to post 7 days.
Yeah.
So,
All right, so
I
if we
think
don't
we've
have a quorum, we
discussed-
can't continue the meeting now.
Right.
unfortunately.
Would we be able to have the current finance members vote and have that?
Yeah, we'll definitely get.
No, that's,
Somebody
No.
will complain about that.
yeah,
No.
that's an illegal meeting at that point.
Okay.
Yeah, as a matter of fact, we can't really discuss anything
You
either.
can't discuss any of this, right?
so just please don't go
Don't have a
anywhere.
quorum.
Just stay here, gentlemen, stay
We're
put.
holding on.
We're trying to see if we can find him.
Yes.
Yep. Just trying to think outside the box.
We got 22 minutes to find him.
Can we just have an open discussion about random topics?
No, we'd have to close the meeting and then we can do that.
No, okay.
Keeping us in line here, Gary. I don't have this.
I tried to call, he didn't answer. I emailed him.
Anybody know where he called in from?
Okay, was there 9 people on the committee, the Black Book Forum?
I just also sent the whole committee, can anybody do this?
All right,
Find him.
I can't make the forum.
we lost the quorum during the meeting.
Maybe his phone died.
Yes.
Was he dialed in on his phone? I
That looks like he was on video, but it might have been
Yeah.
FaceTime.
It could have been a
don't know. No,
FaceTime.
he said he was leaving, so he gave a quick heads up that
I think it's section 8 was.
All right,
Change.
want to just take a motion to adjourn?
Well, it says.
If we wait a minute, see if anybody saw my email. I didn't realize he had to get off.
Yeah.
I can't, normally I read that here, but it's not here because we have our pretty numbers. So he probably sent something in there and we could have stopped
I didn't see
him.
it, I can't see it.
All right, I will just read that out. Send it. Yeah, I just asked for it.
4:33. He has a dinner date. He left because of the dinner date.
Aren't we more important?
It's Valentine's Day.
Oh my gosh, there's a helicopter.
From people I talked to, so they don't think it
Oh,
covers
sorry,
that.
there.
All right, so we entertain a motion? Up to you, Chair.
Yeah.
Well, before we do the motion, we can set the time for another meeting. Just leave with here, and then we figure some of the other people will be available.
So,
I'm sorry, Bernie, what was that?
I say we can talk about having the next meeting so we can then address D. What's good for people?
Kate, is that legal or no? Once we lose a quorum, can we discuss the schedule in the next
would
meeting?
just go ahead and adjourn to be on the safe side, and we can get this figured out via email.
Okay.
All right, can I, then
We can
have
send an email with possible dates.
Yep.
yeah,
Okay,
have a motion to adjourn then?
Move to
I
adjourn.
make the motion. Yeah, I'll second it.
All right, we got a first and a second. Kate, you got those? Okay.
Yep, all in favor?
Aye.
Anybody?
Aye.
Sorry, everybody. All right, so we're